Good afternoon, Chairman Waters and Ranking Member Biggert. I sincerely appreciate the opportunity to discuss natural disaster insurance before the subcommittee, particularly in light of the very helpful comments that were made so far today. I hope that our presence at this hearing emphasizes the seriousness of this problem and demonstrates our commitment to move forward in identifying a national solution. The 2005 hurricanes illustrated all too well how quickly a natural disaster can change the lives of millions. The most devastating of the storms, which struck from Louisiana to the Florida Panhandle, also dealt unprecedented losses to residential, commercial, and industrial property. Hurricane Katrina, in particular, opened many eyes to the problem of natural disaster financing and showed that it is up to us to make sure that we are adequately prepared to handle a disaster of catastrophic proportions, because it is simply a matter of time before the next one hits. As such, we must think ahead proactively to develop a plan to address natural disasters before the next one hits, rather than simply continuing to operate without a catastrophic financing plan at the national level. We have seen the consequences of large-scale disasters and the physical and economic destruction that accompany them, and must act responsibly and prepare to act responsibly. We're all familiar with the sights and stories of Hurricane Katrina, but we must also recognize that families across the United States face a variety of other threats that could rise to the level of catastrophic proportions and hit without warning. Many residents in California certainly remember the devastation caused by the Northridge earthquake, which killed 60 people, injured 3,800, and caused $43 billion in property damage. Even with California's history of seismic activity, only about 14% of Californians currently have earthquake policies, which is a real eye-opening statistic. It only takes one day of devastation from an earthquake, fire, volcano, flood, or hurricane to make us wish that we had thought ahead to establish a national system to deal with catastrophic financing. The economic impact accompanying natural disasters resonates throughout our entire nation. Total economic damages from the 2005 hurricanes will likely exceed $200 billion, with the federal government responsible for paying out in excess of $109 billion for disaster relief. This money, which we all agree was entirely necessary to spend, comes from taxpayers throughout our 50 states, not simply from those affected regions. Those who say that natural disasters are a regional problem limited to coastal states are dead wrong. Until we are able to develop a national financing mechanism to provide certainty for large-scale natural catastrophes, each taxpayer throughout the United States will continue to be responsible following a catastrophic event. On the local level, more and more families across the country are facing the real prospect of being dropped by their property insurance company. Hundreds of thousands of homeowners in my home state alone have been dropped or slated for non-renewal by their insurance companies, even after they paid premiums for 15 to 20 years without making a claim. Those who remain insured are confronted with crippling premiums, which in some cases is forcing homeowners to make tough decisions about whether they can go without property insurance, which of course you can't do if you have a mortgage. Take the case of one of my constituents. We have an individual in my district who was paying $3,100 a year for homeowners insurance in 2005. She is now coping with a premium that reached $16,000 this year. That's a $12,900 increase over 2 years. How can we possibly expect families to make payments each year to protect their homes? Skyrocketing insurance premiums are posing a real threat to homeownership, particularly among our most vulnerable populations, such as the elderly. Older Americans, many of whom are fixed incomes, may even lose their homes outright. The property insurance crisis, as I said, is not isolated to Florida either. Last year, Property Insurance indicated they plan to stop offering new coverage in Maryland and Virginia's coastal markets. Property insurance carriers have also stopped writing new policy for residents in parts of Delaware, New Jersey, Connecticut, no matter where no matter where in the state the damage may be. Furthermore, tens of thousands of homeowners in New York, North Carolina, South Carolina, Alabama, and Texas have also been dropped. It is unacceptable for property owners to be able to get reliable coverage in these markets, and it's precisely this reason that we need to have a national solution. Over the last number of weeks, I've been working closely with Mr. Mahoney, Ms. Brown-Waite, Ms. Maloney, and others, including Mr. Taylor, who has a number of ideas as well. We have been working with Chairman Frank, who has asked us to work on this, and who also believes that a natural solution is necessary. And we're now discussing this issue with consumer groups and other interested parties. We're assembling bipartisan, multi-regional groups of congressmen who collectively recognize the problem on a large scale. and we're looking forward to a well-developed idea with a national backstop, much of which will be identified with the private sector and private sector financing ideas. We will be working also to develop incentives for mitigation standards, including property owners' exposure, reducing property owners' exposure to natural disasters, which will be an important part of reducing the national exposure. We want to encourage responsible development through building code standards and other means. The time for action is now. With the federal government currently in the position of being the de facto insurer of last resort, we hope to establish a more efficient system to foster predictable coverage at reasonable rates. Again, I would like to thank the subcommittee for holding this hearing today on this very important issue, and I'm looking forward to working with all of you, Chairman Waters and others, and the Ranking Member Bigger, to develop an appropriate solution. Thank you.
Thank you very much. The Honorable Tim Mahoney.
Thank you, Chairwoman Waters and Ranking Member Bigger, for holding this important hearing today and allowing me to discuss problems that the people of my great state of Florida are having coping with the devastating impact of natural disasters and their struggles to meet those challenges by having access to comprehensive and affordable homeowner insurance. Before I begin summarizing the insurance crisis facing my district in the state of Florida, I want to make sure that this committee understands that this isn't just a problem for Florida, it's a national problem. States all around the Gulf Coast, from Texas all the way up to Maine, are facing similar situations due to hurricanes. My colleagues in California with earthquakes and fires, my friends in Oklahoma and Ohio with tornadoes and floods, we're all facing the same challenge. The single biggest investment most Americans have is their home. The increased occurrence and severity of natural disasters, whether they be hurricanes, tornadoes, earthquakes, fires, volcanoes, has caused insurance premiums to rise beyond the financial means of many homeowners in my state of Florida and around the country. In 2 years, the Gulf Coast region was struck by 7 major hurricanes. Just one of those hurricanes, Hurricane Katrina, caused more than $40 billion of insured losses. Approximately $15.5 billion of that amount was the result of homeowners' claims. Up until the moment Katrina ravaged New Orleans and the Gulf Coast, my district, District 16, was the single biggest disaster area in the nation, with no less than 4 major hurricanes destroying homes and businesses. Today, 3 years after Hurricane Charlie ravaged the town of Punta Gorda, you can still see the scarred downtown and a community working heroically to rebuild. Despite no major storms during the 2006 hurricane season, many Florida homeowners have seen their insurance premiums double or triple during this past year. Earlier this month, one Florida insurance company won an arbitration case that will allow it to raise premiums on more than 22,000 customers by an average of 75.8%. As anyone who has ever had a mortgage knows, insurance is a requirement, and the payment of your insurance is non-negotiable. This has created a vicious cycle of terror for our seniors living on fixed incomes and our middle-class families struggling to provide for their children. The toxic cocktail of rising gas prices, skyrocketing property taxes, and exorbitant homeowners' insurance costs have created a situation for the first time in our state's history where we have more people leaving Florida than coming. It's so acute that the real estate industry has a name for these people: halfbacks. They move to Florida from the north, and due to the out-of-control costs, they leave Florida and move halfway back to places like Georgia, Tennessee, and North Carolina. Madam Chairwoman, in fact, 1 of 5 businesses in Florida cannot get property insurance. In January, the Florida legislature passed legislation that was intended to provide consumers with rate cuts. Following the passage of this legislation, Florida Insurance Commissioner estimated that the average rate cut for homeowners would be approximately 24%. However, according to one Florida newspaper, Florida's biggest private insurers are asking for price cuts far less than state estimates. For example, State Farm of Florida's insurance company requested rate reduction plan that seeks to reduce the average premium in Florida by only 7%. Likewise, USAA's requested plan would decrease premiums by a mere 3.1%. The situation is so severe that in order to have insurance, the people of my state had to get into the business. Today, the state-run Citizens Insurance Company is the largest provider of homeowners insurance in the state. The solution to our insolvent insurance company was to make it more competitive by offering fire and theft coverage as well. Clearly, the best solution our elected leaders could find when the market failed. The affordability of property insurance is not the only obstacle facing my constituents. Millions of Florida's hardworking families have paid their insurance premiums on time for years. and despite the increased cost. In addition, many of these families have never filed a claim on their policy. Insurance companies have rewarded these responsible homeowners not with rebates, but with non-renewal notices. Just a few weeks ago, Nationwide announced that it would continue with its earlier decision to non-renew policies in Florida. As a result, 25,000 Florida homeowners will be receiving notices that their policies will soon be canceled. The recent action by Nationwide, as well as similar decisions by their competitors, communicate that the market is broken and that they are willing to be part of the solution. As these companies profit from the freedom, stability, and prosperity this nation offers, I believe that the industry should consider its corporate responsibility and join with Congress and the American homeowners in finding a solution to this crisis. Chairman Frank, at a press conference on this very subject, made the statement that the role of government is to step in when markets fail. I'm here, Madam Chairwoman, to testify that in my beloved state of Florida, the insurance industry is broken, and as a result, the state is facing an economic crisis. Floridians are giving up their American dream and are being forced into foreclosure or to make decisions not to take their prescription medicine so that they can afford to pay their homeowners insurance, or they're being forced to sell their homes in a depressed real estate market and leave the state. It is clear that homeowners across the country need a national catastrophe insurance program. The program that we in Congress create must assist our private insurance industry to help them manage risk. Nobody got in the homeowners insurance business thinking that they needed to underwrite the devastation of an Andrew or a Katrina. Secondly, the homeowners needs to be protected as it relates to the availability of homeowners insurance. The policies they purchase must be comprehensive, eliminating the loophole between wind and water. Finally, responsible legislation must ensure people take responsibility for their decisions to live in high-risk areas. Good legislation should not give people and builders a blank check to ignore risk. Good legislation must provide homeowners and builders incentives to mitigate risk by employing state-of-the-art technology. Again, I would like to thank Chairman Frank and Chairwoman Waters for their leadership on this issue, and I thank this committee for the opportunity to testify on behalf of the people of my state of Florida.